in. Right, there we go, guys. The recording started, so if you guys can't make it to the stream, leave early, don't worry. I'll put it to YouTube. Sub Borid, how you doing? Nice to see you in here. Hope you're doing well. Okay, let's go. So, I'll start with Dixie like usual, and then I'll do, like the totals and stuff, and then I'll go on to what I mean by distribution. Okay. So first of all, Dixie, there is absolutely nothing bearish on Dixie yet. Alright, so since our last stream, what we talked about, what I said was on the last stream, we have the potential to put in distributive structure on the Dixie, right? And I said to do that, we need to start SFPing the top of this box if we get there. And more importantly, we need to lose the 0.382, 106.614. We need to be below that. Okay, so we have our initial rejection, we have our radon liquidity, we have our reconfirmation of resistance for now, but there's no follow through, right? So it's a coin flip whether we go higher or not. You could do this and then die, or you could roll over here, chop, and then slowly grind down, right? But if you want a full-blown alt season, you need Dixie back at these lows. Okay, a full-on euphoric alt season typically doesn't happen when the Dixie is absolutely bullish and rallying up, right? If you look at history, like all our alt seasons have been accompanied by a bearish Dixie, like a Dixie that's going down, right? So we kind of, if you want like I said, your full-blown euphoric moves, you want Dixie to be rolling over. There is nothing else to say on the Dixie right now. Don't overcomplicate it, right? If you lose this 382, that's a good first step. If you don't, there's nothing happening yet in terms of showing you who has an edge, let's say, right? Over here, we could say sellers are trying to build an edge, but we can also say buyers are trying to build an edge. It's a coin flip, right? Because you look like you're trying to put distributive structure in, but you're also doing it above your key levels, right? So if you're above this, at the end of the day, you always have the chance to use this as a trampoline and just bounce up higher, right? So we need some follow through, right? Until we get follow through, we can't, for a matter of fact, say, yeah, Dixie's topped out, we're gonna drop, right? There's nothing pointing to that yet. So we want to see some, serious follow through. Give us a bearish engulfing candle and then another lower high. Reconfirm the black line as a range. You can be way more confident that we're gonna go all the way down here, right? As at the end of the day, as long as you're using this as support, you're literally using your range highs from 2022, right, as support. There's nothing bearish about that. Okay, so we want to see some sort of bearish engulfing candle, lose that black line, lose these highs, go back into the old range, and then we can say distributive structure has had follow through. Now let's look for the continuation to the downside, and you can say, I think we're going to get a really, really nice alt season, right? There isn't enough data on the screen yet to actually say that. And that's literally that on Dixie. Don't overcomplicate it. It's the same as last week. Key levels are the same. We just want to see, can sellers give us follow through on this distributive pattern they're trying to put in right now, and that's it. USDT dominance. USDT dominance lost that blue line that we were talking about for ages, right? We lost this, which is great. What we need now for confirmation is we need a loss of this red line. As you can see, that's the only trend holding you up, right? That's your trend extreme. Well, I like to call it trend extreme. This is me drawing the box to fit as many taps as possible, right? And which is why we bounce from there. That's your most reactive area. This red line is representing your two wick low extremes we've had since you've been in this move up. So, and this is valid because you've had two taps, right? You've had two taps, therefore it's valid. We've lost this, we've lost that with confirmation, right? Which is why we see Bitcoin grinding up to 107, right? That's got to follow through from that. But again, now if you want that liquidity to rotate into alts, you want like a full-blown euphoric moves on your altcoins, you want to lose this red line, right? Go take out some liquidity. I don't know, go towards 1.3, whatever levels you go to, right? We've got some targets, very easy. Just look for look for externals, i.e. your wick lows. Those are your easy targets, right? And then once you hit low enough, so for me, it's like as an extreme, I've got 1.37, right? I don't know if we get this low, but that's as an extreme. Once you hit your low targets and you see, again, signs of now accumulation coming in, you see buyers stepping in for the chart, you see, you look at the USDT dominance chart and you think, what, if this was a ticker, I'd long this, then it's time for you to take profits on your coins. right across the board. Because again, if this bounces, that's going to be met with a pullback on crypto, right? Especially once you've had such euphoric moves up and this goes up, you're going to get like blood across the markets, right? So already got this level here now, super extreme here, 3 taps from history, all the way from 2016. There's my external target for, okay, I'm going to see, do we rate this? Do we even get to this? If we do, then around this level, I'm going to pivot based on what price action we get once we actually get here. So that's USDT dominance. Again, nothing much has changed since last week, right? So we've confirmed this is resistance again on the last week. So if we go to the daily, you can see right over here, right? So we looked at last stream I did. We were literally here. We rejected. I said, if remember what I said last week was if you reject, then you get that grind back down towards the bottom of the box again, right? So you got that rejection, got the grind down. BTC grinded up in price. Now is we just need to lose this. Literally, that's it. We need to lose the red line with conviction, right? You lose this, you slip. You don't lose this, you keep bouncing, chopping here. Then that's gonna be Bitcoin just alternating, creating a new range between whatever we are right now, 107. If you do this, I reckon 109 gets hit, and then going back down towards 90s and so on. Right, we're just gonna have a range until this is lost. So that is USDT dominance, and again USDT plus USDC dominance. I like to look at this one as well. The reason I like to look at this one is because this is now the market cap of both USDT and USDC combined. Right, the two biggest stable coins is the market cap of those combined. So I like to look at it. We are currently at the 87886 of the fib speed resistance fan, right? We're trying to hold it. My bull market target, i.e. bear market for this chart, is 2.80%. Okay, that is my bear market target. Why? Because around there is where the 886 is going to be for this macro harmonic structure. Right? So you guys already know this. I do go over this every stream, but since there is new people in this stream, we have got a wave structure that isn't complete yet, right? This is a potential wave structure. This isn't validated until we actually get there. But once we do get there, what we want to see is, okay, well, I say we might not get there, it's a if, but if we do get there, we say, okay, we've got a completed harmonic. Then to validate the harmonic, we just wait for price action to confirm buyers are showing an edge here. Since this is a bullish harmonic pattern, we want buyers to be on our side, right? So once we go down there, it doesn't matter if you do something like this, but ultimately you want confirmation of this as support, right? Reclaim of this as support, and then moves up, and then high lows coming in. You want to validate this level basically, right? Better yet, you get here, react, and then just keep using this as support. That'd be perfect. But I think this is going to correlate. Hopefully something like this is going to correlate. A move down towards 2% is going to correlate with perhaps the bottom of this bull cycle, right? So something that could happen, right? For example, we could get here, get an initial bounce, right? Get your type 1. The type 1 could take you as high as this, right? Which would be a big flush on Bitcoin across the board, right? Not just Bitcoin, on all your alts. This would be a big flush. And then after you get that, maybe come back down for a type 2. Maybe even put some weekly bullish dips in, right? Raid the low, and then reclaim at some point, and then revalidate this level, and then go for your type 2 test. If you get the type 2, you're going for the B point, you're going for the terminal 2 zone. This move up would correlate with, again, this is basically a bear market, right? If this isn't such a strong, if this goes in a strong uptrend, your alts, your Bitcoin, your Ethereum, everything is going to be bleeding, right? Again, why? Because your liquidity, in this case, your USDT dominance, right? And or USDT plus USDC dominance, your DXY, so on and so forth, they are inversely correlated. For anyone new that's not aware of this, they are inversely correlated to your risk on assets. Okay, if the DXY is bullish, if USDT dominance is bullish, typically we say it's a risk-off environment for, when it comes to stocks, when it comes to crypto, equities, indices, right? When they're bearish, that's when we say we're going risk on. Because obviously if they're going up, then what that means is the actual locked liquidity in the form of the dollar is going up, right? The strength of the dollar is going up. The strength of the actual, dollar denominator, USDT for crypto, is going up. Obviously what that's saying is people are flocking into USDT rather than buying crypto, right? So if you look at this, these are all percentages, not price levels. The higher this goes, It can mean a few things. Either people are selling off their coins to get into stables, people are getting liquidated, or people are just staying sidelined, they don't want to buy anything, right? But the higher this goes, that means more and more people are in USDT, or in this case USDT and USDC, rather than in actual crypto. And that is obviously bearish, because you don't want people holding on to their USDT. You want people spending that USDT, right? You want that USDT being sent to exchanges, sent to decentralized exchanges, right? You want that to be limit orders so people can hold supports, right? If it's not in the limit orders, if it's not being traded actively, that money's not doing anything. It's not providing liquidity to the market. And less overall liquidity obviously means there's less powder in the market to move the markets, right? So then overall, it's bearish. The more people that are holding this, the less people that are out there buying crypto. That's the simple way to look at it. Hence the inverse correlation, right? It's not x equals y, it's x equals 1 over y. But yeah, so bear market lows somewhere around here, right? That's what I want to see. And this is just a prediction, of course. We could not even get to this level, or we could completely blast through and invalidate this harmonic, right? But for now, this is a logical wave structure that I see on the chart. So I'm just going to leave it on, and I'm going to see what kind of price action do we get once we actually get there. Okay. So Bitcoin dominance next. So we are getting clear. We're getting very, very clear distributive structure right now. We have a lot of. So since the dots are firing off, basically that tells you there's, even though this isn't an actual ticker that you can trade, right? I'm pretty sure it's not, unless I'm wrong. Maybe you can trade Bitcoin dominance somewhere, I don't know. But I don't think you can. But basically what we're saying is there's a lot of strength going into this area, right? There's a lot of strength, but we are currently putting in, distributive structure. You have your initial resistance right over here, right? An area where sellers are showing control. Hang on, I'm stupid. Let me do this for once. And then let me just go here instead. Do this again. So you had an area, you had a weekly seller zone, area where sellers took control back from the buyers on the weekly, area where buyers were struggling to get above, right? We're saying supply was greater than demand in this red box, i.e. sellers were in control over the buyers. You then have a massive move up, invalidating this thesis for the meantime, right? So you're getting a feeling that buyers are in control of the sellers, demand is greater than supply. But what we actually see is, okay, we've moved up, we've SFP'd the top of this mitigated demand zone, right? There's a mitigated liquidity pocket right over here. This used to be a weekly, 2 week, however you look at it, this used to be a bullish liquidity pocket. This used to be a textbook demand zone. Okay, not a modified, but rather a textbook demand zone. Right? You're saying this area is an area where in the future you expect, when price gets there, buyers to be in control over the sellers, demand to be greater than supply, right? But what do we get? We get the complete opposite, right? We completely invalidate the demand zone by slicing straight through, right? Like a hot knife through butter. We slice straight through. We completely invalidate this liquidity pocket, right? So the thesis now is this, right? Sellers are in control over the buyers. Supply is greater than demand. That's what this tells us, right? We have got no retest of this breakdown, however. Keep that in mind, right? We've got no confirmation that this is actually a valid breakdown. We go, right? We get our bear market low. So we come back up eventually, right? And what most people do, as soon as their liquidity pocket becomes void, they delete it, right? I'm here to tell you, don't do that, right? Treat them as something I like to call mitigated liquidity pockets instead. What I'm trying to say is we can still use the fact that a demand zone represents this fundamentally, right? And now this is what reading price action is all about. It's all in context, right? If you know this is an area where buyers used to be in control of the sellers, or where buyers were expected to be in control of the sellers, and demand was expected to be greater than supply, then we can use that to read future price action, right? So when we get here, if we get here, and then we see sellers taking control over the buyers, and we see supply being greater than demand, then we're saying, look, that's clearly bearish, right? Why is that bearish? Because what used to be a bullish liquidity pocket is now being confirmed as resistance. That is bearish. That is something you can take a short of. If, on the other hand, you come here and you get a reclaim of this level, right, and you see buyers reclaiming and moving up, what you're saying is an area where you expected buyers to be in control of the sellers and demand to be greater than supply, right? That thesis was invalidated here, but finally, after all this time, after like 3 years, that thesis is being revalidated. So even though this is no longer an actual liquidity pocket, the fact you can take what it used to represent and use that, right, extrapolate it to today and say, okay, are we still getting that though? Because if not, buys take control here again. You're saying your buys aren't just taking control of a random area, they're taking control of an area that used to represent like a like an area that was meant to be their control in the first place in the past, right? So we came to a really key area. What did we do? We put in your initial resistance, we put in the rate of liquidity, right? So this is again a textbook distributed price action goes like this. You get initial resistance, you get a rate on liquidity, right? You got to move up, but then what did you get? You started getting swing failure patterns, right? You hit the this is a 50 resistance fan, right, off the downtrend. You hit the 50 resistance fan, SFP, high volume sell candle, right? And the next thing you did, you lost the seller zone again, right? Because what you want is you want to hold this as support area where sellers were in control, right? Even locally now, you want to hold that as support. But what did you do? You lost key fib levels, you lost the mid of that area that used to represent your demand zone, and you also lost your actual weekly seller zone right now as we speak, right? You went below, and now what you're doing as we speak, you're reconfirming what used to be resistance here as resistance. Okay, this is what I like to call, some of you are familiar with this by now, this is what I like to call the inverted smiley. Okay, there is your inverted smiley. If you get follow through from this, right, your alts are going to go parabolic. Okay, Bitcoin dominance is going to go lower. These aren't going to help. The trend is lost anyway, right? The last higher low that led to the higher high has been taken out on the weekly. All you're doing now confirming a lower high. Right? If this lower high is confirmed, and again, for follow through, you want to see bearish engulfing candle. But even if you just get like, now closes below this box, you get below the 3-4, you get kind of body closes below that, right? And you keep closing below this area more specifically. I think it's only a matter of time before you get follow through and you go lower on Bitcoin dominance. How does this become invalidated? This only becomes invalidated if you reclaim this level again. That will mean your inverted smiley face hasn't been formed. You're gonna go higher if this holds a support, right? Maybe you have one more raid up to a 62% and then roll over, perhaps flip that, maybe even go higher still. Who knows, right? But that is if that happens, right? But for now, as long as you're keeping using this as resistance, you've got your distributive structure playing out again. Bitcoin dominance will head lower. Just give it some time. Okay. So that is Bitcoin dominance. Let's look at total next, right? Total, we've hit literally all the targets, right? So these AB equals CDs, I gave you guys 786 right here on total 1, right? We hit the 1.272, 0.5. We've hit the 2.0. So the total 1, above this, there is nothing in terms of wave structure to give yourself new targets. Okay, there is nothing. After here, all you can do, use fib levels and use Elliott waves. That's it. There's not much else, right? And I mean in terms of predicting where we think we can top out, there's not much else. You just got to give yourself targets with pure fibs now, because above this there is no more wave structure, right? Which also makes me think, do we get a pullback here or not? Well, as long as we're using this as support, we don't get a pullback, right? But now if we see not just Bitcoin, but we see total 1 putting in swing failure patterns of these highs and closing below this box, then maybe you do get one pullback, something like this, and then go higher. That could happen. Right, this pullback would correlate with a flush on Bitcoin as well, of course. But if you keep staying above this, and especially if you close above 3.72 trillion, you have literally like nothing. All you can do, put fib levels down, right? So for example, if I do this, hang on. Let's see how far we've come. Right, we're basically fighting the 100%, right? If that is the case, then we can say if you get above this, then I've got just quick targets right off the bat. We've got one here, and we've got another one here. Okay, I'll just draw 2 boxes on the chart, and by no means am I telling you this is where we're going to top. I'm simply showing you areas where if sellers are stepping in, this is the most probable area for them to do so. That's significant, right? It's the golden pocket plus liquidity rate for this range up here. So for now, I'll just leave it at this, and then if we ever exceed these 2 areas in the future, then we can talk about higher prices, right? Very simple. So that's total 1. So bullish. You're broken above your parallel channel. You're literally at your last. This is the last bastion of hope for bears, right? Bears need this to absolutely take sellers to take control and for us to just die. I don't know why you'd be a bear right now. We're literally just blasting through the top as we speak, right? But yeah, you get above this. These are the two areas I see where you could go up to. So that's it. Like there's nothing bearish about this. Nothing. Total 2. Again, we're still chopping about the 1.618. It's a matter of time before Ethereum runs, right? Ethereum rates, and we have a macro wave structure target at around 2.06 trillion. Again, look, this is not a perfect 786. Okay, by no means is this a perfect 786, but I'm taking this as 786 just because this is closer to a 786 than it is a 707, right? One thing you could do here is you could actually do this. If I turn these two off once, I could, I suppose, do this. We have a low, we have a high, we have a low, right? What about this? Yes, yeah, I wouldn't take this personally as a 707. Nah, not as 707. Yeah, I'm taking this as 786. It's not that far off a 786. 786 would literally be just here. It's not that far off. Yeah, I'll take the 786, not a 707. So yeah, this target is in play, right over here. Right, just rate the all-time highs go up 2.06 trillion. That's the what I see in terms of wave structure. Get above that, maybe put new wave structures in. I can put more ABCDs down, right? But based on what we have so far on the screen, this is it. Right here, right, 2.0, around 2.06 trillion. Don't expect it to be a perfect ping, because this is not a perfect 786. So don't expect this to be a perfect 7272 either. We could chop around there a bit, right? But around this area, basically, that's where my next target for total 2 would be, around 2.06 trillion. Total 3, we take a look. Why is this chart naked? What's going on? Okay, there we go. Rated all-time highs, right? Front ran the 2022 12-month seller zone retest, right? Front ran it, closed above the 2021 12-month seller zone mid. That is a beautiful weekly close. So what you're looking at right now for total 3, maybe one more pullback, but don't expect a strong pullback. When I say one more pullback, I simply mean don't be surprised if you get one more pullback towards 1 trillion, right? Basically, literally bang on perfect. Now this is you area where sellers were in control, right? Again, if you take a look on the weekly, area where sellers were in control, area where buyers took control back from the sellers, right? There's your weekly buy zone from last week. The mid of that's right over here, which lines up with your 12-month seller zone as well, mid. So again, right, as long as you don't lose this level now, all's good, right? Chop and then reclaim, go higher, right? And especially if you keep staying above here, you literally only have to do this for you to go to new prices. Where could the new prices be? The new prices, again, above this, close enough to a 786, the new prices could be around 1.36 trillion. That's your next wave structure. You flip the 1.618 into support, as we looked at last week. Right, that's been flipped into support now. Last week, this was actually, this was occurring as we were looking at the stream last week. It was successful, right? The retest was successful, and now you just, you look ready for the next move up, basically, right? That's it. All-time highs have been rated, so, if you want to go even higher now, that resistance has been taken around 1.36 trillion. Again, don't expect a perfect ping because that's not a perfect 786, but around 1.36 trillion. Total others, you've hit your 1.414, right? So last week, I actually said, I'm just going to do this at 618 because last week, the fact that the 707 exists completely went out of my mind. For some reason, I was thinking 618, 786, right? I forgot. Or rather the 7, I just wasn't thinking about the 707. So what you have here is a valid wave structure. Grossati pointed out to me after the stream. So 707, the inverse correlation for this, 1.414, right? So the target has hit. Of course, now you need this to flip, right, for us to go higher. But as long as you're holding, again, you're holding the 2021 12-month seller zone low, right? Again, you have a yearly level here at 379.57 billion. As long as you're holding that, and on the lower time frame like the weekly, you're holding the chop around the grey box, right? You're fine to carry on going high. There's nothing bearish. You hit a key target, that was resistance. You're having a pullback, right? And again, you've already had a successful retest of this once. So if I was to do this, your 0.5, you're at the mid of your last week buyer zone is 369.21 billion, right? You want to see reclaim. If you do anything like this, you want to reclaim that as quick as possible and then go on your way higher. Otherwise, as long as you're holding this as support, nothing to be worried about, right? If you end up closing below this grey box, then that'd be the worrying thing, because then you're saying you're back within this range. In that case, you wouldn't be surprised if you wick lower than people think, back towards 298, right? But as long as you're above this grey box, Don't even think about targets here, right? Just focus on successful retest. So that is total others, right? This is your others, this is your coins not in the top 10. And then we have total DeFi, nearly hit the 1.618, not yet. You're flipping your T2 into support. Here is your weekly buyer zone. You have a high volume sell candle. So again, don't be surprised if total DeFi gives you a pullback towards 132 billion. But as long as you're holding this area, you're fine. To be honest, as long as you're holding any pullbacks to 120 billion, you're fine. But to keep the momentum up, it'd be great if it didn't lose the 0.5, right? Did this, pinged above, reclaimed, and went higher. That'd be much nicer. But look at all of this, right? There is nothing bearish. Total 1, price discovery, right? Total 2, looks like it's about to slingshot into price discovery. Total 3, rated the highs, looks like it's about to slingshot to price discovery. Total others, looks like, you know, even if there's going to be some pullbacks, it looks ready to again go up to take the next high, right? Total DeFi, even if it has local resistance, it looks ready for, even if you get a slight pullback, to go and take the next highs. On all of the totals, there is nothing bearish going on right now. Nothing, right? So there is no reason to be bearish on in any manner right now. There's no signs yet telling you, like, you know, oh, you know, sell your bags, the top's in. Nothing, right? Total others, look, successful retest. How can you say this is bearish, right? Look, wave structure I presented in the harmonic setup video, right? Hit. Or again, for those of you that are new, what was the reason I gave the people on this stream to hold their rolls, right? A very simple reason to hold your rolls. Look, you have this trend, you had this trend, and you still have this trend on total others, right? This is others dominance. So this is the dominance of your crypto projects not in the top 10, right? We hit a completed M shape. This is a Gartley. This is called a Gartley, right? When you hit the Gartley, what did you do? Look, smiley face. So a cumulative structure was put in when the Gartley was hit. So you're getting bullish price action at the M shape, and then you've got your reaction, right? You have your reaction, you have your type 1 reaction. You get your type 2 return, right? And then in the type 2 return, right, what'd you do? Look at the weekly, lower low in price, higher low in RSI. You have weekly bullish divergence, weekly class A bullish divergence. Where is the weekly class A bullish divergence happening? At a return to the 786, you're revalidating that support. Furthermore, also at this trend, right? So, and again, you have put in a smiley face. You could not ask for a cleaner price action. A cumulative when the M shape completed, type 2 return, a cumulative reconfirmation of your type 1 reaction, your PRZ as support, as valid support, right? Always bullish. Weekly class A bullish divergence, holding trend. It was so easy, right? What I was saying, look, get into your alts. Very simple way. If you lose this trend, there is no point holding on to your alts. But as long as you're holding on to this trend, right, you want to be in your altcoins. And guess what? We never lost this trend, right? Never. So it's very, very simple to actually position yourself in alts here, right? This was the most simplest way. I gave a lot of different reasons, but this was the simplest one, right? I said, look, you have this level. As long as you're above it, you stay in your alts. If you close below it, get rid of your alts, right? It was very simple. We stayed above it. Again, put in a cumulative structure again. There's your smiley face, initial support, radon liquidity, reconfirmation of support, and now you're broken up. And now you're retesting old range lows as support again. If this holds, you're going to range highs. You flip that, you're going to be in a new range. And guess what? Your new range is going to take you all the way up to all-time highs, right? All-time highs right here. So even if you look at others' dominance now, even in terms of altcoins, right? As long as you're holding this red box now, there's nothing to be bearish about. If you lose this red box, then you might, alts might have a market-wide flush as we get one more move down towards here, perhaps, right? That would not be clean price action, but as long as you're holding this trend again, nothing's changed. As long as you hold this box, though, there is absolutely nothing to be concerned with, right? Again, I can do this. You're literally at the mid of your last weekly buy zone mid, right? 0.5, 10.77% has been retested, and you're getting a reaction off it for now. Right, there you go. You hit the top of the box, closed above. The confluence with the 0.5 on last week's close, that's really bullish, right? So again, even if you do come lower, as long as you put in local cumulative structure and go higher, there's nothing to be worried about. Even if you have a pullback, there's nothing to be worried about. You just can't lose this red box for now, okay? Then you're saying momentum is just gone, right? We want this momentum to keep up. You can't lose the red box. But that is total others. So you can see basically what I'm trying to say is, if anyone's overly bearish for no reason right now, don't listen to them. Okay. And by that I mean, of course, you can try and take the perspective into account, but I just don't see a world where there's a valid perspective in terms of TA how anyone can be bearish right now. Okay, there is nothing on USDT dominance. There's nothing on Dixie, right? Because at the end of the day, Dixie's literally, even though it's at the highs, it's at resistance right now, right? Nothing on total, any of the totals, nothing on others dominance, right? Nothing. Even on these macro indicator charts, there's nothing. Bitcoin dominance, nothing telling you the top is in. Okay, so I don't know why people like, I've seen like a wave of bearish posts. I don't know why. I've been rambling on for a little while. Let me check the chat in case there's been any questions. Wait, can you guys not see this stream? Wait, is my stream working? Shit. Pengu. Oh yeah, I think they're on, was it Coinbase or Bybit that listed them? Sorry guys. Is it working now? Now working fine, okay. Discord servers are high on weed. Yeah, it's getting recorded if you couldn't see. The mythical inverse smiley structure, exactly. As foretold in the prophecies. There's a deep crab at 4.4 trillion. Wait, hang on, Grassati, which one's that for, bro? I've not actually considered harmonics. I'm guessing that's for this. Let me take a look. For those of you that are unfamiliar with what Grassati's saying, he's saying there's a wave structure, the form of a deep crab. For a deep crab, we need an 886, so I'm guessing it's to this peak here. 1 second. You'd be completely right. Nice catch. See, this is why we love Grassati, bro. He's cracked with these. Okay, 1.618. I did not consider that, actually. Yeah. There we go. Yeah, that is a very, very valid deep crab. Amazing. Nice. And guess what that lines up with, guys? This lines up with that level I put down anyway. Alright. So for the deep crab, we're looking for 886 retracement on B. Okay, there it is, close enough. Anywhere between a 382 and 886 down over here. Between a 2.0 and a 3.618 on the extension, and a 1.618 overall on the extension. Fibs don't work. Fibs don't work, guys. Remember, fibs don't work. Fibs are bullshit. But yeah, there you go. This is okay. There, that's a valid target. Lines up with trend-based fib extensions, golden pocket plus liquidity rate area. Okay, so there's already confluence for this wave structure. This is showing you the fib retracement. What I've got down here, I used with trend-based fib extension. Two completely different application of fibs. Okay, so this is different confluence, not the same confluence. Wait, is it still freezing for you guys, or is it working? Let's get this sorted before I carry on, because it's all good. Yeah, it works. Okay, great. Okay, so now let me explain to you guys. Let's make it a bit more educative. Let me explain what I mean when I say I'm looking for distribution, right? Macro distribution to sell. Okay, so let's make it educative. I'm gonna go on Bitcoin. Okay, I'm gonna go on Bitcoin. I'm gonna get rid of these for now. We'll look at Bitcoin properly in a minute, right? And I'm gonna get rid of this too. Completely new chart. Okay, let me explain distribution by doing something very, very simple, right? I'm gonna go all the way back over here, and I'm going to show you guys what told me that it was time to sell last bull market, because that's literally what I'm going to be looking for again this bull market. Okay, now there's a few students of mine in this stream. They'll already be familiar with this, so sorry guys if this is a bit boring, but I think this will be important for the phase of the cycle we're in. This is going to be important, I feel like, for everyone in the server to know, so I'm just going to take some time to go over it. I'll show you the distributive side. I also show you the cumulative side of why I was bullish. I was telling people to buy down towards 15k in 2022. Okay, first and foremost, okay, flashback 2021, markets are an uptrend, right? Markets are an uptrend. We're nothing's been broken. We look like we're going higher. How do you know when we've topped out? How do you know when it's happened, right? Some things to consider are, firstly, like I always say, key levels. Okay, significant levels. Learn to find significant levels, please. If you're waking up and you're changing your levels every single day, those are not significant levels. Okay. First things first, learn to identify significant levels. This can be a bit harder if you don't know what you're doing in price discovery, right? But there's still ways you can do this, right? You can use fibs, you can use diagonal fibs, you can use Elliott waves, you can use Wyckoff, you can use trend analysis, you can do a lot of things, right? You can use log versus linear, you can do a lot. But learn to find significant levels, i.e., have a reason for why could a particular area be especially reactive, right? Next thing, um, after this, you need to be able to read price action. There's gonna be no indicator that's going to tell you with certainty, right? Let me tell you this, okay? If you learn how to read price action, right, and you can you get a feel for how to read what's happening in the actual candles, what's the candles telling you, you're going to have way more conviction, right, in what you're reading over any indicator. I cross my heart and hope to die. I mean that. Okay, there is no indicator out there that's going to give you a benefit over you simply just learning, taking the time and learning to read the price action for yourself. Right? What do I mean by reading price action? For me, reading price action just means getting a feel, right? Getting an understanding, let's say, of what are the candles trying to tell us, what are the wicks trying to tell us, what's the interaction between buyers and sellers like here, right? And for that, you have to consider the trend, you have to consider the key level you're at, you have to consider the absorption, any distribution accumulation that's going on, right? There's a lot of things to consider. But you put all that together, you're basically telling yourself, you're writing to yourself a story of what is the story is, what is going on in between buyers and sellers. That is what reading price action is. Sounds simple, it's not. It takes years to develop. To do it properly, to get an understanding, get a feel for this, it takes years, right? But once you do that, I promise you that you won't really need any indicator, and I really, really mean that, okay? So I'm a big advocate, again, for learn to read price action before you look for indicators, learn to walk before you can run. Even there's a few of my students here, I don't give them any indicators until a few months in to our actual sessions, right? Because it's get used to price action, get used to price action. Every single lesson I do, get used to price action. After that's happened and they're comfortable, towards the end is when I actually give people some indicators to look at, because that's now you've learned how to read. Now it makes sense for you to actually start incorporating indicators, right? But what we're doing here now, let's look at this, okay? So trend, what is the trend? Trend is bullish, low, high, high, low, high, 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 low, high, 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 low. So for now, there's no reason for you to be bearish, right? So the trend checks out to the bullish side for now, right? What about in terms of, okay, price action, right? If it was a price action, okay, you broke up, you had a pullback, right? What did you do here? If we take a look, right? You're in an uptrend, you're broken out from previous all-time highs. And once you broke out from previous all-time highs, for students, where is it? Here. If you take a fib retracement, the first rejection you had, buy stepped in at the shallow retracement golden pocket. Right now, for those of you that are in my streams a lot, I've talked about this before. If you're in a strong trend, you don't want a 618 straight away. Okay, if you're in a strong trend, you want buys selling in. Right? If you're in a strong uptrend, for example, you want bids coming in at the shallow retracement golden pocket. Right? At the shallow retracement levels, you want them to hold. Because if this drops down all the way to the 618 or lower, you're saying you're getting a 61.8% discount on this asset, which is great if you want to buy, but it's not good in terms of momentum. It's not good in terms of market structure, right? If you're truly bullish and this asset's in hot demand, why would anyone let this drop 61.8%? That goes against the thesis of a strong uptrend of a bullish asset, right? So you want buy stepping in, hopefully by the time your shallow retracement golden pocket plus liquidity rate gets hit, right? And that is exactly what we see over here, right? Low, high, your shallow retracement golden pocket came in, right? Buys took action, didn't close below, and then you straight up went higher. Right? You went higher. So the price action, right? Key levels now, going back to the trend is holding, key levels are holding, right? Buyers are stepping in where they need to, right? So I'm going to do this. Let me delete that, right? Let me just do this. The 0 to 1 for students. And I'm going to go 1 to 2. I believe it's the 1 to, nope. It's the 0 to -1. Just going to go ahead, put that down right over there. Okay, there we go. And then one thing I'm going to do real quick is I'm going to go ahead and I'm going to untick a few of these. Don't need them, right? In this particular phase, we don't need them. I'll explain why in a minute. But for now, these are useless. Get rid of this, get rid of this, get rid of this. I'm going to get rid of this as well. Only going to leave this on, okay? Because we already know this is where we topped out, so we don't need the lower levels for this current phase of the market, right? So I'm just giving myself, for now, what I'm doing here, I'm giving myself key levels where we could go to based on this fib retracement, right? I'm using a retracement to get an extension. Big shock, yes, you can do that. Trend-based fib extension isn't the only way to get extensions. Okay, in this case, I'm using negative fibs, I'm using inverse fibs to give extensions to myself. Then what do we have? Well, we have the fact we've topped out from this low to this high, right? That is a completely valid range too. So I'm going to go ahead and I'm going to do this, right? Hang on. Template 0 to 1 inverse. Go up, and I'm going to do this, and I'm going to change the color of this to white so you guys aren't confused, right? So we have this and this. So these are two different fib retracements I've used as extensions to get to these levels, basically. Okay. Last but not least, what do we have? Right, we have this. I know it looks confusing for now, but just let me land. Okay, let me explain. We have trend-based fib extensions as well, because we can see we have a low. Right here, we have a low, we have a high, we have a higher low, right? And then we have a trend-based fib extension as well. So now we have a series of key levels to give to us. Now the most obvious level out of these is literally just this trend-based fib extension, right? If you want to keep it clean, you can look at it just in terms of this. But when you're actually going into price discovery, you want confluence, more than one confluence, right? In which case, these two also come into play. I'm going to go ahead and I'm going to draw a box. Okay, so this is literally what I did last bull market. I'm drawing myself a box. Right, I'm saying if we go, my thesis is if we go up here, I'm immediately expecting a raid of this all-time high. I'm not expecting a double top, right? In my system, double tops and double bottoms, very rare. You're hardly gonna get them. Okay, I'm not expecting a double top, so you're either gonna front run, which I'm not expecting. Okay, because obviously the trend is still maintained. So until the trend's broken, there's no reason to expect a front run or anything like this. So if that's the case, I'm expecting a raid, right? So the raid of this basically means anything above the zero. So I'm going to draw this box out for myself right over here for now. If we get above this, then we're saying we have this cluster, right? So these were the two boxes I had drawn like this last bull market, right? And of course you can look at log, you can look at many other things, but I'm only going to give you one perspective today so you don't get overwhelmed or confused, okay? So let me literally make this invisible for now. I'll only leave the trend-based fib extension on, right? So it's not too messy for you guys. We have our significant levels for price discovery, right? So if we do go up here, then these are the areas where if seller stepped in, I'm going to take it as significant, right? Why? We have the golden pocket plus liquidity rate of the golden pocket of your trend-based fib extension. We have the fib, then you have the liquidity rate, right? Of your range extreme. In my system, this is a liquidity rate. You have a liquidity rate of your range extreme of a fib of your macro fib retracement up to this point, from this low to this high, right in this box, right over here, right? So let me just go ahead and put that down like that. And last but not least, you also have right in this area, between this area, you have right the 886, right, the 786. Just below that, you have the 66618, right? But lining up to the area we're interested in this area right over here, right? So basically we've got lots of confluence. You could see extra confluence up to here, but especially this 702, 707, right? That is the confluence I'm interested in here, because that would be a liquidity rate of this golden pocket, right? So we've got key levels from three different factors now, is what I'm trying to say here, right? Three different factors, three different key levels. Of course, you can use, you know, trend-based extensions from here to here to here, and what we've done, we've gone off the one. So if I do the same thing and get the 1 to 2 down, here to here, oh no, sorry, yeah, from there to there, then this area again also lines up with the liquidity rate, right? The liquidity rate of your range extreme, right? This box right here. So we can see we have a lot of reasons. We've looked at 5 different reasons as to why we're interested in this zone here, basically this big zone, somewhere within this zone, sellers to step in. If they step in and they start to show distributive signs, we take it seriously. Flip this to support, great, we go higher. If not, this is where I'm expecting sellers to step in. I already have some pre-mapped key levels on my screen, right? So now what I'm going to do, I'm going to hit play, right? We're going to go to the daily. Now, of course, I'm going to go ahead and I'm going to just turn on one of them. For example, the trend-based extension, I'll leave that on. Right, let me just do this so it's not too messy. Let me drag it to the left. One box, another box here, another reason over here, then another reason up over here. Right, so we can see we have a big stack of confluences over here. And then we just, from this point on, I'm going to draw one line over here to mark our previous all-time highs. We're going to take it from here. Okay, let's hit play. Right, what do we see? Okay, first things first, this box, we've gone into it, 618, we've hit it, right? We've rated previous all-time highs. Let me turn on market order bubbles. We've rated previous all-time highs. The move was aggressive market buying, right? The aggressive market buyers are not being rewarded, right? What we say here, the aggressive market buyers are not being rewarded. There are trap traders in this area, right? We have what we call absorption, right? Locally speaking, we have absorption going on. The aggressive market longs are being absorbed. Right, that is what's going on over here. That is what we're saying. So what I'm going to do real quick is I'm going to go over here and I'm not going to draw a new box, okay? So now let me just put this off to the side for now. Like, we already know what this is. Let me put this off to the side like this. This is a seller zone. So those of you that have seen my streams before know what that means. This is a seller zone. This is an area on the daily where buyers try to take control, but sellers took control back from the buyers. Right, and it's not just the fact it's happened, it's where has it happened. We know there is confluence here, right? Look, you 618, the primary retracement, in this case the primary extension, right, of your trend, of your macro trend has hit, and sellers have taken control for now. This isn't what you want to see, right? This isn't what you want to see. Now, I'm not saying this marks the top, but this very well could, right? Because going into this now, in terms of price action, what do you have? You've rated all-time highs, but you've rejected off your key level. 618 rejection, right? You've created a seller zone. All these people that market longed, they're trapped, right? Buyers have been absorbed, meaning, again, if someone market longs, what's going on, right? If you're market longing, you're being an active market participant. You're taking liquidity off of passive traders, right? So if someone market longs, that means someone's limit sells are being hit. So what we mean by absorption is, okay, aggressive buying is going on. A lot of market longs are happening. But the market longs aren't in enough volume, aren't in enough numbers to absorb the limit passive sells that we have going on in this area. Right? If that happens, we're saying, okay, once the market longs die down, the liquidity is still not been absorbed, the supply hasn't been absorbed, there's still supply overhang above us, therefore you get a dump. Right? So this is, you need to look at footprint charts and stuff to properly look at this. If you look at looking at the footprint chart, I'm not going to look at the footprint chart today. I'm simply going to explain it in terms of candlesticks. I'm not going to confuse you guys, right? Even in terms of candlesticks, absorption was very evident here, right? And now you've got an area where sellers are taking control on the daily, right? Sellers are taking control, and we can see that we've got an area visibly where sellers have taken control all around a key level, the 618, right? Now, again, like I'm saying, this doesn't mark the top or anything like that yet, right? This doesn't mark the top, nothing like that. All we do, we wait for more price action to develop, right? We want to see, do we get any signs of distribution? Do we get any inverted smiley faces, right? Nothing like that's happened yet. You've got a key level at the 0.5. Let's just hit play, right? We'll hit play, see what happens. Okay. We have a support right over here, right? Locally speaking, we have support. You have 0.5 of the fib trend-based extension as well. You have support, and then if I hit play, what we'll be getting now, you guys can see where I'm going with this. If I do this and I go on the lower time frame, right? Let's go to the 15. You have initial support, and then you have a big raid on liquidity, right? You prices drop below your support, below the 0.5. Loads of market shorts open up, right? Now, whereas we were getting aggressive buying at this top, we're getting loads of aggressive selling at this low, right? Loads of market shorts are opening up, and yet the question is, are those shorts being rewarded? And the answer is very clearly no. Even though all these shorts are opening up, look, support's being held. You're not getting follow through to the downside, right? Meaning, people are market shorting. What happens if you market short? When you market short, You're saying I want basically you're saying what's the best price at which buyers are willing to take a contract off my hands, right? So when you hit market short, what you're doing is you're going to hit the next best bid, right? So we're saying the buy wall is absorbing all of these aggressive sellers, right? There's absorption going on. You have another wick down. You stop out anyone that was absorbed here long, right? You stop out any potential longs from here. They're absorbed. They're stopped out. Liquidity generated, but again, you end up closing above, right? Very, very clear signs of absorption. Seller absorption is going on over here. So you do not say the top is in. You don't open any ridiculous shorts because what you're getting is, look, initial support, radar liquidity with trap traders, reconfirmation of support. As long as this area holds, right, you've got a smiley face. This is accumulative. This is telling you the top is not in yet, right? Basically, you're saying you can expect one more drive up. So we hit play. What do we get? Oh, let me pause it. That went a bit further than I expected. Right, there we go. So with that accumulation, right, spring back test, that leads to your move up, right? What does the move up do? You once again, this move up raided this. Now this move up has raided this, right? Anyone that was short from here has been stopped out. Liquidity generated. Market makers can get their positions filled, right? Secondly, you're inducing FOMO longs, right? As soon as you close above this, people are going to market long. People are going to start piling into longs, is what it is, right? There's always going to be breakout traders, literally always. You're above it. So now what you're saying is, look, you have this area on the daily, right? Around that 618, around the other fib levels as well that we know resides in this area where sellers have taken control before, right? What you're currently doing is trying to say buyers have now attempting to take control back from the sellers, right? Seller zone, buyers are closing above, meaning buyers are trying to take control back. You want, successful retests, and any move to the downside, you want that to be reclaimed and closes above the 618. That is what you want now. Okay, you stay above this. As long as you're staying above the mid, you're fine. If you get below the mid and close, that is not good. You're reconfirming this is resistance, right? So let's hit play, right, and pause, and let's go back there. Okay, so you have a breakout. The following candle is a successful retest of the mid, right? You didn't close above the full seller zone. It would have been better if you close above the seller zone, but at the end of the day, the mid has been respected for now. So now it's all up to the confirmation candle. We want the confirmation candle to close green. We want it to open green, and more importantly, we want it to close green as well. The open of the confirmation candle here can give you nice scalping opportunities. You know your next target is the 6-6, right? You're not going to take any swings off this. It's too high. But if the confirmation candle opens green, you can take some nice scalping opportunities off this, right? So again, let's do this. Let's go to the 1 hour, right? Let's hit play. What do we get? You go down, right? You retest the mid, and then when you see that mid starting to be reclaimed, right? And you see reaction like this, go to the 15. You got a really nice area for you to take a scalp, right? For scalps, for me, is preferred time frame 3 minutes, right? 3-minute entry model. So when you see something like this, huge market sells, absorption going on, but now you see those sellers are not being rewarded. You take a risk at a long, right? Your entry model, this is time frame alignment. You're getting lower time frame entry models based off higher time frame price action. So if you're looking at 1 hour for your actual targets, then you know where's your target going to be. Your target is going to be all the way up over here. Basically, as soon as you go to this area and sellers step in, you can take some profits, right? But this is a scalp. You're not going to swing when something's sitting at all-time highs, right? There is no swing to be had. But ultimately, you're taking the scalp because you see there is a successful retest, right? But you do not know whether you're going to get follow-through by the time the confirmation closes. You need the confirmation to close to actually see the follow-through, right? This is way too high for you to just bet everything on the actual retest candle closing. Basically, you want confirmation to follow through, and guess what? You did not get confirmation from the follow through because okay, the confirmation opened, right? You went down, hit this, went all the way up as we saw, hit the next target, the 0.66, and we'll look at that. We've got overlaps with other fib targets. That's why this box is here, right? So we've gone and hit the other key target, and all that to say, this is again drove by market longs. Look at all these green dots, right? But now you're completely below your seller zone and the 618. You're completely below, right? Like I said, you want to be above this, but buyers could not hold this, right? I.e., an area where sellers were in control is once again an area where sellers are in control, right? So what we're saying now is we have initial resistance, radon liquidity. Look, market longs, i.e. trap traders, they're going to be forced to cover, right? We've got trap traders. We've got basically we have confirmation now that this is deviation, right? The only way to undo this is for this expeditiously. You want buyers to go and reclaim this into support. If you don't do this, you risk doing this. And again, we know what is that, right? It doesn't have to be the mid. It can be at the low. It can be at the mid. It can be all the way at the top. As long as this box is used as resistance, you have your inverted smiley face, right? So we hit play. What do we see? There you go. Boom. You go here. And again, if you look in the daily price action, 1 out of 4 hour entry models, you go to the 4 hour, hit play. Look, you were here for a good, like, basically nearly a day, right? 16 hours you were sitting around this area. Every time buyers tried to get above, what did you do? Candles ended up closing below. So all that to say, you have resistance, initial area where sellers to control, radon liquidity now, right? Loads of trap traders, reconfirmation of resistance. Do we have trap traders here? Go check. Go to the 15 minutes. Yes, we do, right? Aggressive longs opened up all the way into this zone, and if you look at the 3 to 5 minutes, you probably see even more. Aggressive longs opened up all the way through. They did not get rewarded. Look, every single time you tried to breach, you ended up closing below. You have confirmation. What was once resistance is resistance. You have your inverted smiley face right there. So where's your entry model? Again, daily price action, looking at 1 out of 4 hour entry models. Even on the 4 hour, you see, repeated attempts like this. It's very easy what you're looking to do. You're looking to do that. Initially, if you want to take initial profits, just look for a raid of all-time highs, right? Like we know that if this does play out now, we're looking for a raid of this range. If this range raids, we've already filled this liquidity pocket. Your next logical target would be towards 54k. And that's your next logical target to take profits, because this raid has already happened. This demand zone has already been taken. If the trend, you're looking for trend to break, so on and so forth, this is your next logical target, right? You can take some profits here if you want, but if you took profits this early on, right, then you want to size up again if you get confirmation of this being resistance, right? But again, now let me switch back to the daily, right? We have an entry model on a short, right? And this is something I took personally. I wasn't an analyst at this point. I was trading solo, but this is still, my system. Like I said, I've been developing this for years, right? So here's the short. Here's what you're looking for, right? And by no means am I saying this is the macro top. But you're at an area now where it makes sense to be in a short. You're not looking for longs, right? Especially when you consider you got bearish price action. It's the key levels. This price action is not happening in the middle of nowhere. We're not just pulling shit out of our ass and just saying, yeah, look, bearish. This is happening at key levels, right? Multitude of different key levels. We've already looked at all of these different key levels. It's happening at these key levels, right? All of these key levels. There's a big cluster of fib levels here. All of these have been hit. It's happening at these key levels, right? These higher targets haven't even been hit, so we can forget about that for now. So let me delete this now. Don't need, right? It's happening at key levels. So let me just do that, and that, right? And more importantly, if you now take a look at the macro, right, what do we have, right? Firstly, 3 months, right? Let's go to the 3 months. Look at the RSI. You can look at MACD. You can look at whatever. Higher high, lower high, right? So high in price, lower high in RSI. Class A bearish divergence on the 3 months. 2 months, high in price, lower high in RSI. Class A bearish divergence on the 2 months with a load of trap traders, as we can see, aggressive market buying all the way around. Monthly, high in price across the peaks, lower high in RSI. Class A bearish divergence on the monthly. 2 weeks, high in price, lower high in RSI. Class A bearish divergence on the 2 weeks. Weekly, high in price, lower high in RSI. Class A bearish divergence on the weekly. 5-day, high in price, lower high in RSI. Class A bearish divergence on the 5-day. You can go down to the 3-day, right? High in price, lower high in RSI. Class A bearish divergence on the 3-day. Across all macro time frames, down to the 3-day, you've got across the 2 peaks, Class A bearish divergence. Rejection from the bottom of the bullish control zone, right? So it's not just the fact we've got distribution happening. It's where is the distribution happening? At key levels. Secondly, what else is accompanying the distribution? Well, something else that's accompanying this distribution is, well, like I said, Class A bearish divergence across all macro time frames, right? And it's not just that. If you now take a look locally, higher high in price, I go to the daily, higher high in price, lower high in RSI. So not only do you have bearish divergence across both of these peaks, on the macro, you also, the nail in the coffin is you now also have bearish divergence at this local peak, right? The left of the eye and your radon liquidity, right here. So the actual distributive pattern, right? Your spring and your spring back test is off a daily bearish divergence. Again, class A. So you can see weakness is piling on across the board, right? So when you see this, when you see these macro signs, right, when you see weaknesses piling on across the board, you've got key levels being hit and sellers showing you a clear edge. It does not matter if your favorite influencer is telling you 100k Bitcoin is coming, you at least hedge a short. You take profits across the board on all your positions. Okay, so then after that, let's hit play. So first and foremost, where's the last lower high? Sorry, where's the last high low that led to the higher high? Right here. So then for continuation, you're looking for a trend shift now. We're still in an uptrend, right? So we can't really say the top is in yet. We've identified very bearish structure, but to say the top is in officially, we need to have a break in trend, right? So let's begin that by seeing, do we get a break in the daily trend? You can do this on the hourly and the 4 hours, of course, but if you're looking at the macro trend being shifted, might as well look at the daily as a minimum, right? Let's hit play. What have we done? There, select bar. This is what we're interested in. How do you know when a trend is shifted, right? Low. If you're in an uptrend, you're waiting for the last higher low that led to the higher high to be taken out, and then for a lower high to come in, right? The lower high could come in lower than this lower high, this higher low, sorry. The lower high could come in somewhere here. It could come in at this level itself, but it doesn't matter where it comes in. You're waiting for that lower high to come in after the last higher low that led to the higher high gets taken out, right? Over here, the last higher low that led to the higher high has been taken out. So you're just waiting for a lower high to come in, right? Let's hit play. And when you see something like this, you're now seeing your support, where the accumulation was coming in is now resistance. You can be certain there's your lower high, right? So then you can actually size up on your trade right over here. You can trade with the position size you normally wouldn't, because let's say so for me, when I do a starter position on when I'm entering on a time frame aligned basis, it's like 1.5 Bitcoin, right? At 200x, that's about, let's say, $350 to $400 position size. At 1.5x, that's my starter position, right? That's what we're opening here. I see this lower high, I'm throwing another one of this in, right? So I'm close to around, let's say, $800 in position size at 200x, right? So up to about, let's say, 3-4 Bitcoin short by this point. And then the only thing I'm waiting for here is on the weekly, where is the last lower high that led to the lower low, right over here. So if you now get a weekly confirmation of a lower high as well, I will do one more size up, right? And guess what? On the weekly, you went and you confirmed it right at this tab, right there. You got another tab right there. So you see this, you can size up again, right? Open up another, 1 BTC, 0.5, whatever, right? Altogether, 5 BTC was what I had as a short all the way here. Average is literally going to be here. And the reason I can size up like this, right, is because I can put my stop loss to break even straight away. Your initial position was from up over here. You've sized up at confirmation. Remember what I said, 20, 40, 40. Don't go all in until the trend is confirmed, right? Once the trend confirms, you throw your last 40% in, right? But by this point, even the weekly had told you the trend has shifted to a downtrend. So then you can start saying the top is it, right? Because not only do you have distributed pattern, not only do you have class A bearish divergence, you also have your trend being shifted, right? You're fully positioned by the time this happens. You just sit back and chill now. Give yourself some macro targets, sit back and chill, wait for price action to develop, right? You want more confluence, wait for this low to get taken out. If this low gets taken out, right here, and then another lower high comes in, just add more position to your short, right? TP on the way down and size up when you get lower highs again, right? We hit play. We can see what happens is, oh wait, you took that down, came up, put another lower high in around this area, right? You go up, weekly supply zone, sorry, you put a lower high in at the supply zone, right? So this lower high is something you can size up on again, or if you're not in a short, you can take a short off this, right? But this is distribution, right? And this is exactly what I'm looking for. this bull market, right? Signs like this. I'm looking for price action. I'm looking for key areas to be hit. I'm looking for sellers to show an edge at those key areas. I'm looking for distribution to come in across a series of time frames, not just on the 1 hour or something like this. When something like this occurs, you can then be more confident in being bearish, not even bearish, but at least hedging a short, taking profits, right? Until that occurs. If this is not occurring and you're literally flipping resistance to support like we've been doing so far on Bitcoin, there is zero reason, I repeat, there is zero reason to be bearish. Okay, so after this, of course, we went on the downtrend, right? So now what do we have? Well, we look like we have a thunderbolt, right? The start of a thunderbolt. So then what you can do, here, oh my god, would you look at that, to the close, that is a 382, right? So then what you can do, you can go ahead and now you can look at, okay, where do we bottom out? You already think it is, where do we bottom out, right? We have this 382. If there's a 382, there is a 2.24, right? If the 2.24 gets exceeded, then you have the 2.618, and then if you exceed that, then it's the 3.618. But we now have a level for where we could potentially bottom out on the higher time frame, right? Where we could look for a macro bottom. You have a harmonic pattern, right? What else do you have? Well, if you go to the 12 months, again, here is your buyer zone, right? So here is your 12-month buyer zone, area on the 12 months previously where sellers were in control, right? This was literally your big resistance for 3 years before you broke out. And guess what? By the way, that breakout didn't give you a retest, so a pullback into this area would give you a macro retest as well. So there's number 1 seller zone, number 2 seller zone is over here. Let me make that white. Actually, no, let me make that red. There we go. What else can we do, right? So we have key areas. We have harmonic lining up here, so confluence is building. Diagonal fibs, let's see what we get, right? In terms of the fib speed fan, you do this, take it, hang on, take it to here. Let's look at deep retracements. Guess what? We have the 87886, right? The deep extensions, the areas where you want the bear market's price targets to go to, also lining up around this area. Right, what else do you have? Okay, if I take the trend basic extension from here down to here, up to here, hang on, not this one, I need the 0 to 1 for this, up here, down here to here, then we also have the 87886 of the trend basic extension within this area, right? So you can see now we have, just like we did for the top, we have a series of areas. We have an area that is very confluent. We're already finding it. Right? We're finding an area that is very, very confluent. So then we have an area where we could potentially bottom out. We're not going to say we're bottoming out here for definite, but this makes logical sense, right? You coming into this area again would give you a retest on the 12 months of this breakout. You're coming down to historic price action, right? Historic area that's got historic price action. You're coming down to an area that has a harmonic, right? You're coming down to an area that has diagonal fibs, horizontal fibs. If you were to take at this point, right? I can't do this in replays, but if you were to take the macro, and I say the macro fixed range volume profile, your point of control is literally in this area as well, right? It ends up being in this area. So even in terms of volume, your most traded areas literally somewhere around here. Right? For some reason I can't do that in replay, so I can't show it, but that's extra confluence there, right? What else do we have on the monthly? We can go ahead and we can draw this down, right? You have a monthly fair value gap in this area also. So liquidity pockets, fibs, support, resistance, right? Buy, seller zones, historical price, no matter what you use, you have a confluence. And so block by block, we're building an area with very, very high confluence, right? On top of this, you can look at footprint charts once we get there. Do you have higher time frame bullish CVD, right? Is your CVD making a, is your price making, for example, a higher low as your CVD is making a lower low? If so, then you have, bullish CVD. You've got signs that even though loads of aggressive shorts are opening up, the price isn't reflecting that, meaning a passive buyer is absorbing all of that. You've got bullish CVD that could be building down at these lows, right? That's something else you can look for in footprint charts. Look at order flow, look at TPOs, right? Look at liquidations. You've got so much things. Honestly, when I tell you there were so many different reasons why this was a good area for confluence, right? So then all we're going to do from here is we're going to hit play. I'm going to go on to the daily. We're just going to hit play. Right, there we go. I'm just going to fast forward this until we get to our areas. Okay, so we're turning this 786, 764 into resistance for now. Right, turning the golden pocket liquidity rate into resistance here. Bouncing off the, there we go. Right, so now this is the area where we've retested previous all-time high. Right, we lost it. And now we've gone deeper, right? So we're getting loads of aggressive selling. We're getting it at the mid of your seller zone, right? At the mid of your monthly fair value gap. This is happening at your harmonic 2.24, right? 5938, this was your AB equals CD 2.24, don't forget. Loads of different confluence, right? Market shorts opening up, but now what you're seeing is you're seeing those market shorts are being rewarded, right? And yes, like that was the case here, but guess what? This is a key level. In terms of significance, this area is much more significant than anywhere else on the chart up here, because just look at the amount of confluences we have down over here. Right, so we have aggressive selling going on that is not being rewarded. Next, of course, we have to watch out for the trend, right? We have to watch out for the trend. And let me just do this real quick. Let me turn everything but the 87886 off. Okay, actually 0.94, 8786. So everything from here on out can be switched off, just so it's not messy on the chart, and I can leave it on, right? So you can see the amount of confluence we had in this area, right? So again, remember, trend is something you always need to consider. What's the trend here? The trend is obviously bearish, right? We're still making lower highs and lower lows. In fact, here is your last series of lower highs and lower lows. Lower high, that led to the lower low, that led to another lower high, that led to a, that led to a lower low, that led to another lower high, that led to a lower low, that led to another lower high, that led to this lower low we're currently in. But, right, we've got strength coming in, right? We've got a retest. First and foremost, the retest narrative, right? This was the reason I was looking at this area. The main reason was because of this retest. Right, on the 12 months, we had a breakout. We never retested this breakout, right? You can look for yourself. I'm not going to waste time doing it, but you could go as far down as the daily, right? Let me just show you. Look, after that breakout, you never had a retest. This is true daily above, right? Even on the 1 hour, you didn't have a retest after this breakout. No time frame gave you a retest of such a key area. And this is significant because look, you're saying you were under this range here for 3 months. Right, and it didn't get a retest. That is, you need a retest of key areas like this, right? So the retest narrative was my main driving factor for this area. I was looking at this area as a potential bottom. Once we get here, we're just looking for signs of buyers coming in, right? Looking for us to successfully get out of this range. If you do that, you have a successful retest. If this retest is successful, what happened last time you were above this? The last time you were above this, you went all the way back. You went all the way up to 68997, right? So that's exactly what you're expecting again. So if you were to, show the retest is successful, you'd be entering along thinking, yeah, well, why would I not target 68k again? Because that's what happened last time. Historic price action is literally telling you that's what happened last time you broke off this level. All right, so we go back over here. Let me hit play, right? So there's of course nothing super bullish yet. The only thing bullish is the key area you're coming into, right? So, and now we take it again bit by bit, reading price action. Loads of aggressive sellers are coming in, but they're not being rewarded. They're market selling right into 12-month supports. Right, this higher time frame supports we've drawn down from 2017. They're aggressively market selling straight into the area. And this is what I mean when I say you should not have to draw key levels every single day of your life, right? Look, you could have drawn this level down in 2017. You did not need to change it years down the line. Years, right? This was 2022. So 5 years down the line is when you get reaction at the same key areas you had from 2017. Okay. In fact, this is a short you could have caught using the same levels back in 2017 to give you these lows. Right? So you have aggressive selling going on. That's not being rewarded. Sellers are being absorbed. The passive buy wall here is too great. Right? Still not enough for you to be calling a bottom, but still enough for you to be at least a starter position. Again, remember, 20, 40, 40. Okay? And when you're this close, right, when you have price action like this building, you can increase this 20. You can do 40, 30, 30, for example, because your risk is low. When your risk is this low, you might as well elevate your risk if this is the potential low, right? So you could do 40, 30, 30. So you're in with 40% here. Right? You leave the rest for if you go a bit lower to DCA, if the trend shifts, right? Because again, don't forget the trend is still to the downside. You don't want to be fully allocated before you've even broken trend, right? Aggressive selling going on. Let's say play. What happens? You go up, right? You go up, and then you make another lower high, right? You make another lower high. That's not good. But guess what? This lower high is the first lower high that does not lead to a lower low. You're now respecting your diagonal 886, right? That's being held as support. More aggressive selling going on, but you closed above. Right? When you see signs like this, you can be fairly certain you're not going to take these lows again, right? So then, that 40% you're increasing your allocation, right, from your DCA. And just in case you don't go lower, 15%, right? So now you're 55% allocated. You have 15% left still for when local resistance gets flipped to support, and you still have 30% left. I total you have 45% left right now for if the trend shifts, right? So you can literally do that. You can say, okay, I'm 55% in. The remaining 45% I'm just gonna save for when the trend shifts. You can say that to yourself, right? You hit play. What you get? Big move up, right? Your last lower high gets taken out. If a high low comes in now, that's bullish, right? Is it gonna come in yet? Who knows, right? You go up, you flip the 852, you go up, take out the next lower high. That led to the lower low, right? And then you go up and you take out, you bounce there, right? Flip that support. So locally on the daily, right? You've shifted trend, you've confirmed the shift of trend. On the weekly, not quite yet, but what have you done? Even this lower high that led to the lower low, you've taken it out, right? Look, it's subtle, but it's there. You rated it. Again, if you're in a downtrend, right? We've looked at it in terms of the uptrend. If you're in a downtrend, you're waiting for the last lower high that led to the lower low to be taken out and for a high low to come in. Right? It could be above, it could be at the level, it could be below, but for a high low to come in to confirm a trend shift, to confirm you've gone from the sell side, right, the left side of the V, to the right side, the buy side of the V. Right? So let me just do this, get rid of this, and this. Okay. So now all we're doing is we're waiting for a top to come in. Let's hit play, right? There we go. We can be fairly certain after this, oh, we're getting a pullback, right? We're going to pull back too. Again, this is a particular thing on my strategy. The trend that kickstarts everything. If you take the fib speed fan of that, right over there, and for this one, I'm simply going with golden pockets and liquidity rates. I'm interested in this area right over here. Why am I interested in this area? I've got an intersection with a golden pocket and 19804. If we get this, this would be beautiful. Right? Get it, flush out all the local liquidity. So we've had a substantial move up. You can see market longs opening up. Stop all of them out, and then we've already taken out the lower highs. We're just waiting for a high low to come in. Right? That is where the remaining of my position size will be added. Basically, once the confirmation of a high low comes in, go to the weekly, hit play. What you do? You go down, and you have a weekly bullish hammer candle forming. Right? Look, why is this significant? Because with this, there's a few things that's been done, right? First things first, you've successfully retested that 2017 all-time high, right? 19804. You've successfully retested that, right? Why is that significant? Because this is a retest of this breakout right here. You've confirmed this breakout to be valid, right? But if this breakout is valid, then that means this retest was valid. And if this retest is valid, that means you've confirmed that this retest, this breakout is also valid. You've confirmed that this wasn't just a phony breakout. This entire range is not just deviation. You're not going to go lower, right? You've confirmed that. Secondly, look at the actual candle itself, right? Now, if you look at the actual candle itself, like I said on the weekly, that is a weekly bullish hammer candle. You could have literally done this, opened a swing on the weekly itself, right? Stop loss is a close below that level, right? What are you targeting? All-time highs. That is a risk to reward trade of 17.38. Right? Because you've got confirmation now that this is indeed support. You've got confirmation buyers stepped in. Right? And it's not just that. So let's look at more levels again. It's, again, firstly, where is all of this happening? Again, all of this is happening at significant levels. Right? This is happening at key areas. If you take a look over here, right? Lower low in price, higher low in RSI. You now have Class A bullish divergence on the weekly, right? Whereas you had bearish divergence there, you now have bullish divergence over here. The bullish divergence is accompanied by a load of trap traders. Market shorts just not being rewarded. The bullish divergence is happening at very, very significant areas, right? The mid of the monthly fair value gap, the mid of 12-month buyer-seller zones all the way from 2017. The 87886 of the trend-based extension, the 87886 of the fib speed fan. I could put the pitch fan on. This is a key area in terms of pitch fans as well, right? Volume profile, the point of control is here. Again, all this strength is coming in at a key area, right? So again, everything falls upon, do you have significant levels on your screen or not? This is why every stream I say, learn to find significant levels. Once you do, reading price action there becomes much easier. The reason I can be confident in what's happening here is because I'm confident in my ability to only have key levels on my screen. Right? I have a plethora of confluences in this area, right? So again, stop loss is below this wick low. right? On the weekly, this is your entry model, 17.38 RR trade. But now this is where time frame alignment comes in. If you're looking at weekly price action in my system, anywhere between the 4 hour to the daily to actually enter, right? You go to the daily. What do you see is happening on the daily? Oh, look at that. High volume sell candle, meaning aggressive selling took place. A lot of selling took place in this candle. Huge market shorts opening up, and yet look how the candle closed. Bullish hammer candle on the daily. Clearly, very, very clearly on the weekly and on the daily itself, sellers have been absorbed. The aggressive market sellers have been absorbed. This is where I would take a long, right? Right here. Since I'm 55% allocated already, I have 45% left to actually size up on a confirmation of a trend shift. This is where the remaining 45% is added. My average is going to come literally somewhere over here. I can put my stop loss to break even straight away. Right, I can put my stop loss to break even straight away. Okay? Because once again, the reason you can do this is you're already in a position from lower. Right? So then when you add here, you're still good. Your average is obviously still going to be in the green, so you can put your stop loss to break even straight away. But one of the advantage of the daily entry model is, look, if you take this entry based on the daily rather than the weekly, or because you simply align the time frames, just look at the risk to reward. Okay. Whereas the weekly gave us a risk to reward of 17.38, the daily is giving us a risk to reward of 73.56. For every $1 you're risking at this entry, you're making potentially 73.56 back if you're holding all the way to this external target right over here. Okay. So let me delete these two ones, right? So same as at the top here now, right? Another thing to note is when this came in, what do you have? Huge smiley face, right? So whereas you had distributive structure going on at the top over here, right, with the inverted smiley, you now have a cumulative structure going on here with the proper smiley, right? And this is a specific variant of the smiley face many of you will be familiar with. And by the way, why did we reject here? One key area to do things, you had a weekly fair value gap right here, okay? So this fair value gap got mitigated right here, and that mitigated fair value gap still were used as resistance. This is why I say, please, when your liquidity pockets get voided, don't delete them fully. Treat them as mitigated liquidity pockets. You can still read price action at that area in the future, okay? So we now have a cumulative structure going on as well, right? Trend has shifted, buyers are stepping in, everything is lining up, right? You would take a trade here. If you didn't open any positions here, right, which I don't blame most people if they weren't opening here, right? At the end of the day, there was like 5 people in streams. It's the same 3 people in your Twitter DMs, right? In your Twitter replies, literally, right? There's no one around. So obviously, like, when sentiment is that in the gutter, that much in the gutter, I don't blame you if you don't take a trade here. But when this came in, this is when you would have dropped your ego and said, no, we're not going to get 12k, 10k, 8k Bitcoin. We look like we're going to go higher. The amount of people that and ICT traders, bro, that was screaming for 10k, 8k Bitcoin, absolutely ridiculous, right? So let me delete this. The trend is now to the upside, right? You're making higher highs and higher lows instead of lower highs and lower lows. So, right, you go up. After this, what happened? You go up, and then you start flipping this into support. Right, so the mitigated fair value gap was once a bullish liquidity pocket that turned bearish is now once again bullish, right? Right here, you can see that. So then a flip of this, if it didn't enter here, then this is where you next make your entry, right? So my spot Bitcoin all the way down here. My first swing opened up over here, sized up over here, which is why I had that 26k average swing, right? When this high low came in here in a minute, right? This high low, that is where I averaged up. When I saw a high low being put in at the liquidity rate of the golden pocket, this is why I had an average of 26k. I sized up heavy in this one for a swing long, right? This is all spot. I closed this 26k trade when we hit the 73k high, right, in March. That was very public with that. I said it in Unity, I said it in my stream, said it in Twitter as well. And now the swing I have open on Bitcoin is my 39k Bitcoin, right? Because then, you went higher, vertical accumulation, and then you put this low in. Basically, when I saw this sweep, I saw this, what was once resistance, being flipped to support. I opened along, right? 39k. That is my current swing on Bitcoin. I'm not closing this until I see exactly what we described right over here. Distributive patterns coming into play. I want to see distributive patterns coming into play. If I don't, I'm just I'm not gonna just randomly close positions because we went to a key area. Basically, I want confirmation. I don't care if I close a bit lower. Swinging, right? Swing trading is not about selling the Pico top, buying the Pico bottom. It's not about that. Swing is about building an average, so your current portfolio is not impacted, right? Your you don't get chopped out, not just in price, but with time, and you build a good average so that you extract value on the bulk of the move. Okay? That is what swing trading is all about. Drop the ego. It's not about buying the exact bottom, selling the exact top. You try to do that with swing trading, you're not going to have a very good time on the long scale. You're not going to have a good time. Okay? It's about swing trading. You've got to have the time frame perspective as well. You could be right about your levels, but you could be completely wrong on execution because you didn't account for the chop that comes with time. Okay, there's many reasons why I see people who know what they're doing with TA get chopped out because they're only thinking in terms of horizontals. There's no time frame perspective at all. You need to account for time as well. You give time, you let structure build, right? You let patience. It does not matter. You're not all about buying the exact bottom. Confirmation is very, very important. Okay, so I'm gonna go ahead. I'm gonna delete all of this, right? I feel like that was enough explanation. But if I delete all of that, there we go. Now that falls under here. So where we currently are, right, on Bitcoin, where we currently are, this should be all the way up here, right? So if I get rid of this, this is where we currently are on Bitcoin, right? Do you see any signs of distribution? No, look, if anything, right, let me go by a week-to-week basis. Here's your last weekly seller zone, area where sellers took control. Guess what? You flipped it to support. There was below that, your weekly seller, buyer, seller zone together were right here. Guess what? You flipped that to support as well. There is no distribution going on whatsoever. Literally zero. Okay, no signs sellers are weakening up yet. Aggressive buyers are being rewarded for now. Right, so you don't blindly take a short off this, you don't blindly go bearish based off this. You want to see, for example, if you wanted to top out right now, you'd want to see breakdown, reconfirm this area's resistance. You see that, you've got distributive structure going on, you accompany this with bearish divergence, then sure, you have loaded reasons to be bearish. Right now, I do not see them. Okay, if I go ahead and I turn on this again, there you go. Your next target, I think, we grind up towards 109,806. The 2.618 of the ABCD is waiting. We're very, very close, right? And then we go here and you see sellers taking control. You can try and take scalps, right? You're not going to open a swing trade out of nowhere. If you take shorts here, it's going to be scalps. You only open swing positions when you have confirmation from the structure as well, right? Because if you get above this, 132K is in the cards, okay? It's very much in the cards. So that was, accumulation, distribution, right? What I'm looking for, basically, right? That is it. I know I went on a bit of a tangent there, but let me quickly check the messages. Let me take a look. It's fine. Okay. Yeah, exactly as Caleb said, bro. Learn to walk before you can run, right? Trade without indicators first. Once you get a hang of it, then you've got loads. Unity offers its own. There's free indicators online that you can use based on your strategies. Then you can put it in. Let me just quickly check the chat. Sad accumulative structure. That looks more melancholic. Yeah, cosmic for sure. I should have drawn that happier. Some Greek gravy. Appreciate you, brother. Yeah. So you definitely had volume confluence there for sure, brother. Yeah. Yeah, like a Crosati put down. Yeah, as we speak, we're about to put in your all-time highs, right? But that is, like I said, until distributive structure comes in, there's no point being bearish. But can keep grinding higher, right? So if you look at, we don't have any bearish divergence yet across these two peaks. Not anything significant because look, you're above, you're at the bullish control zone. RSIs aren't rolling over on the weekly, right? What about the 3-day? It's not rolling over on the 3-day. In fact, you've used the top of your neutral zone as support. You're in your bullish control zone. On the higher time frame, you can stay here for a long time. Okay, you can literally chop here and Bitcoin could go to 200K. Who knows? I don't think we go to 200K this cycle. Just again, disclaimer. I know I say every stream, but if we do, I'm more than happy, right? But hopefully you guys found that helpful, right? I just wanted to make it a bit more educative than usual instead of just looking at charts. Give you guys actually something concrete in which you could apply yourselves, right? What you're looking for. So even if I'm busy, I can't give an alert, I can't make a stream. If you see that happening, you can for yourself make a decision on, okay, but should I be holding here or should I trim some profits? Right now there is no reason to be blindly closing, right? Nothing distributive is going on yet. And again, even for the, eventually, of course, we're going to roll back into a bear market. You do not need to be swing short from the Pico top. Like I said, I wasn't swing short from the Pico top, right? Your initial entry is somewhere around the top, but then, if you're looking at the charts, then you size up at the confirmation of the trend. So your average isn't at the top, right? Isn't at the Pico top. It's not about, oh, look at me. There's many traders who will post, they'll post their P&Ls. They'll be showing you these ridiculous numbers. But is that good in a swing mindset? No, it's not, right? If you do that as an average, then it's good. But if you're just opening up a one position here, right, and then that's it, you're just holding on to the rest of that, you're not trimming profits along the way, then you're doing it wrong, right? It's too flashy. So do what's best for your portfolio, okay? You can, if you have any questions, put them in chat. Wouldn't CAS be at a support level at the weekly? Let's take a look at CAS. I'll take a look at CAS in a minute, but then, does anyone have any questions on what we went over today? This is very foundational stuff, right? This is nothing advanced. I'm not showing you guys, rocket science. This is very, very basic stuff, but it's very, very important. You don't need anything fancy to be able to trade. That looks very good on CAS, actually. Or FWOG. Yeah, I'm in a FWOG long as well, bro. I've seen that. That looks good. That looks very, very good. On the 3 day. On the 30. On the 3 day. That's good structure building. I'm in a long for that. Thanks, Chris Audi, bro. Fib retracements, trend base of extensions, Fib speed fans. I do not understand what you're putting into the chat. Any book, okay, recommendations. If you want to learn harmonics, go to Scott Carney's website, theharmonictrader.com. All his books are there for free. Trading in the Zone, that's a good beginner one. That's like literally, if any of my normie friends want to learn about trading, I just tell them to read that first. There's a lot. SCOTT CARNEY. But in the website, you're gonna have to type in the Harmonic Trader. Let me type that in for you. Hang on. Sorry for caps. Oh, it's not on caps. Never mind. All his books are free. There we go. Yeah, the books in question. Grasadi's put them in chat. And Trading in the Zone as well. Nice. Thanks, brother. But yeah, so that is distribution, accumulation. I've not touched this in terms of, like TPO's footprint, right? I've given you a very basic view. But this is more than enough for you to be able to navigate, right? Okay, so I'll look at some recommendations you guys have put in chat. So look at FWOG, we'll look at Sol, CAS, and then after that, I'll call it a day. Let's look at CAS first. Is it in this one? Yes, it is. Caspar USDT. I do not see Caspar at. One sec. These are in play. Let me leave them on. I'll just turn them invisible for now. So this is better done, in my opinion, on log, to be honest. Right, one sec. Give me a moment. Casper's just in range. There's nothing really crazy going on with this. You've lost your... As long as you're below this, I wouldn't be in any longs on Caspar. But as long as you're holding this grey box, you're completely fine. Your cumulative structure could be coming in based off this. Okay, so let me take this back to linear now. You have a weekly buy zone in this area. There you go. Okay, as long as you're holding 0.14, that is great, right? So if I go back to the weekly here now, I can go ahead and draw this on as well. There, right? So in context, you have an area. Initially, this was the area where sellers were in control, right? So you can see the chop around this level. If you lose this grey box, do not be surprised if you go back to this range. Okay, that's the range I'd be looking at if you lost the grey box, i.e. between this mid and here. You want to be holding this for now on Caspar. If you don't hold this, then you go lower. If you hold this, you chop back up higher, basically. Yeah, this zone right over here, I'm going to color that red so you guys can see, not get confused by the different boxes. Right, this zone is the top of the weekly seller zone. This is the bottom of and this is, sorry, the mid of the 0.5 as well. And this also has the mid of your big zone that we originally marked out within that, right? So if we go back to the weekly, hang on, yeah, that's your like range, right? The mid of the range. So if that red box holds on Caspar, you're completely fine. Okay, if the red box doesn't hold and you start doing this breakdown, and then 4 hours start closing below this red box, I look for any wicks down towards 0.125 and then reclaim that as support perhaps, and then go higher. But if this red box holds, then again you will have a smiley face. Your smiley face is going to be right over here, right? But if this red box doesn't hold, then I'll be looking for this bigger smiley face down over here. So if you wanna, basically if you wanna risk a position on Caspar right now, if you close below the red box, cut it. Yeah, it's an area where you can at least manage your risk to reward. Does that make sense, guys? Those of you that asked for Caspar. Yeah, really big bot on Cas. But as an area we can at least attempt to manage a risk here, guys. So again, if you're looking to take a trade, your invalidation is very clear. Below this red box, you close below, cut it. Just cut it. You don't need to hold below this. If you reclaim, just re-enter. I'd rather you protect your capital than keep holding in the hopes it bounces. That never works out for anybody. So that's Caspar. Let's look at FWOG. Have I even charted this personally? I must have. Or did I look at the MEXC chart? Oh no, this is one of those ones where I just looked at the MEXC chart, so it looked good and opened along. But let's, I'm guessing MEXC has the most data anyway. Let's open it on MEXC. Is MEXC the one with the most? I'm gonna take it as the one with the most data. Right, FWOG. Nothing on the 12th. There's gonna be nothing on the 6th. Nothing on the 3. That's the level you flip before going higher. You have a daily zone that's been tested. Structure, weekly structure. You have a weekly sellers. You have a weekly seller zone right over here. There we go. And you're currently retesting this area where sellers tried to take control in the past. You're currently trying to retest that. You might get a wick down into a vertical accumulation and then just go up. You have a buyer and a seller zone next to each other right over here. So on FWOG, your key levels for now are 0.2809, 0.25117 and 0.22143, right? These three zones we're currently at. If you lose this, forget about adding until this area gets reclaimed, okay? But if you drop down some more, let's say you go do that, you can see aggressive selling is going on, right? So looking for those to be absorbed soon. Maybe one more flush down. Anything like this, you add. If you don't get a perfect tap here, you don't get a good entry opportunity, right? Because what else do we have here? We have a daily seller zone right there, right? I want to see something like this to size up on, right? There. Ultimately, if you can hold this red box, you're going to go higher. You want to see a reclaim of the mid of this zone up here. Okay, this is your weekly seller zone. If you reclaim this, look, anytime you bounce up here, you're going towards this level minimum, right? So I'm just going to go point it out. You're going towards 0.487 minimum. So in terms of risk to reward, like you can slowly layer in here. Like if you see, buy stepping in a key areas, you see reactions going on. You want to see some green candles coming in, not just a sea of red. Don't try to catch a falling knife. Wait for structure to develop. But once that does come in, your size up is going to be at a flip at this level, right? And as soon as that gets flipped, you're going to go up towards 0.487, because that is the range. Every time you've gone above this, you've gone there. That's just price action. I'm just literally reading historic price action. So you don't want to lose this red box. Basically, if you lose it, don't think about adding anything yet, right? Until you see, like, maybe if you lose this, I have a feeling it's going to be like a big wick to liquidity raid. Wait for that wick to be, like, reclaimed. Wait for like a high low recapture of these key levels, and then add here. You don't have to worry about entering the exact bottom. Okay, trust me when I say the safety that is provided to you by confirmations of key levels is much greater than trying to bottom tick an entry, especially for swings. Recapture levels, you enter there. Very, very simple. Does this have any key indications as to where it could? No, in that case, I'll have to do this. Do I think this is going to happen? Maybe some point in the next bear market. I don't know if you get this low, honestly. I mean, the harmonic structure is there, but I don't think you get this low. So, yeah, no. Don't worry about this for now, guys. I'm not trying to scare you. Just seeing what's there. Loads of aggressive shorts opening up at the end of the day. The trend is still bearish, so you have an area right now on the screen where, as long as this red box is held, you're good. Size up on the actual flip of this red box, the higher one, the weekly seller zone. Once that happens, I think you go towards 0.48. If you lose this, don't think about buying until you see some sort of raid and reclaim. What about just playing a bit defensive right now, right? Because if Bitcoin does give us now a flush across the markets, alt will absolutely die. Yeah, stick to the source for harmonics, guys. If you're trying to learn, just stick to the source. You can do it for both leverage and spot, Geek Gravy, but I mean swings, right? I don't layer in for scalps. For scalps, for me, it is very much about, okay, let's enter the bottom, sell as close to the top as possible, right? For scalps, it's about precision. You're on the lower time frame. You can't have it any other way. But when I say layer in, I mean for spot or for your leverage swings. Yeah, account for the chop that could come in. But yeah, guys. So that was today's stream. I just kind of wanted it to be a bit educative, right? I didn't really want it to be let's see. Let's take a look. Leo. Nah, below the red, at the red box, but below Magic Eden token just straight up dying. RIP to the people who didn't sell. I sold like 95% on my bag. I got 5% remaining that staked, so I can take part in the rewards and get a allocation for the upcoming airdrop again. But yeah, I'm glad I sold. Sold at an average of like around $7 because we got a pump after we dumped down towards 4. Right over here. GFI, nice retest. If this retest is successful on GFI, this can go higher. Definitely watch this one, guys. This one is a sleeper. GFI. PAL. Then we've got distributive structure right over here on PAL. Maybe this gives us a flush like this, but PAL looks good. Right, another one. M shape, PO3, right? The accumulation manipulation went into a liquidity pocket, which is a prerequisite for a valid PO3. Trend has shifted, so we could have a dump. I don't care. Just want to put a high low in. A power will absolutely run in the future. This is ready. Right? Just watch this, guys. If you get any dump, right? Any sort of pullback towards a key level, for example, like there's a daily fair value gap, there's a weekly fair value gap, anything like that gray box down here. Any of these key areas get hit, then it's an ad. I'm already done long on this, but it's an ad. PAL looks really, really good. There's many that look good, right? Fed looks amazing. Breakout, you're now retesting. As long as you can retest this grey box and this green triangle, Fed's gonna go higher. Loads of accumulative structures taken place, harmonics have taken place, right? Prime, another one. You flip this low, flip this box, and you just hit. So you could pull back to the blue box. It does not matter, right? Ultimately, prime, you're looking to go higher now. You're in an uptrend. Rio, 123% from the average entry I gave on my harmonics video. Storage, below this, we're not interested in entries. If you get back towards this red box, try and enter there. But again, you're out of your downtrend, right? So now this is just chop before we go high. They're not gonna make it easy. But yeah, so I'll look at one last thing. I'll look at Sol, right? Let's look at ETH and Sol, and I'm done. Okay, so let's look at ETH and Sol. So firstly, ETH. Like we said, total 1 looks great. ETH rejecting off its key inflection area for now, right? If it keeps doing this, it's okay to take a head short on this. Your head short isn't going to be a swing short. You're not going to be like, oh, I'm going to drop this to new lows, right? It's going to be very quick. You take profits aggressively if you see buy stepping in at a pullback towards key areas. But who knows, maybe you get a flush of, the 3K lows before we go higher. In that case, you're going to thank yourself for having hedges open here. Very, very simple, right? If you were to take a hedge right now, you'd do it. If you were to open it right now, the simple way to do it, put your stop loss above that retest wick high, and for now I just target the bottom of the key inflection area, something like this, right? You can also go for for higher, tighter risk to reward. You'd be going for a lower time frame entry model, of course, but on the daily, right? If you wanted to, I'd do it like this. If you wanted to hedge ETH, and let's look at Solana. But don't get it twisted. Ultimately, if you flip this zone, right, especially if you keep using the middle support, as long as you flip this zone, you're gonna go higher. All-time highs is coming, 4,800 ETH, and then after that, take it all the way up down here. Let's get it, let's take it up. You've got AB equals CD targets, of course. Hang on, where have they gone? Yeah, breakout, successful retest, right? Above your supply line we were talking about in the past. There's your ABCDs, right? 1.272 of your 786 is right here. The 1.618 of your 1.6 of your 618 retracement primary projection is at 5,316. And then no, that one isn't technically valid. So ignore the black one for now. 618 is a 1.618. I don't remember if 618 can go to a 2.618. I'm pretty sure that's only the 382 in terms of the ABCD. But we do have the macro 786 to the 1.272 as well. Right, that takes you to 5,890. You get above that, you've got somewhere at 6K, like mid sixes. You get above that, you have 7,000s. Right, and if you take a look at this in terms now of, if you take a look at this in terms of like a wedge, right? I see many people do this. If you take a look at this in terms of a wedge, everyone and their grandmother's been doing this recently. If you take a look at this in terms of the wedge, then that's another reason why some people are saying 8K targets, right? Up here, 8 to 9. Who knows? I'm not going to be a moon boy and tell you hold ETH till 9K, because that'd be very disingenuous of me. Right? There's no guarantee ETH is going to 100%. If it does, great, we make more money, right? I'm heavy in ETH. But if it doesn't, then you've got key targets where you're going to take profits. If you see flip of those levels, you can size up, right? But if you see sellers stepping in at key areas, take some profits. If you see distributive going on, take some profits, right? But that is ETH. So last but not least, let's look at Sol, and I'm going to cut Solana. Above the key inflection area, again, nothing to fear. Look, same area I gave you guys weeks ago. You're holding it. It's what it is, right? Key levels, buyers are stepping in. They're defending what they need to. As long as you're above this area, nothing to fear. You've hit your 1.272. You've chopped around. You put in inverted smiley face at your raid, right? 1.272. You got the move off the inverted smiley face right over there. But as long as you hold this red box, this grey box, you're not going low. If you lose this grey box, don't be surprised if Sol drops all the way down to 170. Right? If you do this, This is not a surprise, okay? Forget that. But for us to talk about this level, we need to lose the grey box first. So for now, as long as you're holding the grey box, you're completely fine. Yeah, you're completely fine as long as you're holding the grey box. If anything, this is like a bull flag right now. So don't be worried on Solana. AB equals CD 0.5, 2.0 takes you to 309. There's literally nothing much to do right now, guys, right? Because look, all the different like in entries, even as recently as September, was given when action needed to be taken. That's when majority of the action was taken. I'm not going to be fretting about opening positions here, right? I'm in all the longs I need to be in. All I do is scalp if I'm free, right? And then after that, just head some shorts if I see, you know, bearishness coming in, get some weakness. That's it. Otherwise, it's pretty chill here. Even though it looks hectic, it's really not. Because ideally, this isn't the places where you're looking for positions you should already be in. If you've been following, you know, the live streams, or if you've been following signals from any other analyst, right? If anyone's given swings, you should already be in. So, you know, I can't recommend a buying Sol here. Why? Because I gave you guys average entries, like literally from 70 through to here, right? So average is literally down in the double digits for Sol. So why would I add position size here, right? It's just not worth it. The last bids I gave on all of this was the start of this year. If you scroll up in my channel, that's where it was, right? All the limits, whatever I'm looking for. So those filled, held, and you're up, right? I'm not going to be bidding anything here. I don't see the point, just because my bag's heavy enough, right? I'm just ruining my average for no reason here. If you get a deeper flush, sure, I might size up even more. But for me, this is just not worth it. Maybe I'll take some leverage swings, right? Or rather, you know, like some scalp to swing kind of mindset trades, right, at these highs. But otherwise, I'm really not stressed. Like, I'm in all the positions I need to be in. You just TP on the way up, and that's it. Again, I've been updating the entries I took off the harmonics completed video, right? The harmonics setup video 1 and 2. I've been updating my positions on Twitter over time. I don't want to like PNL dump in my own channel here, which is why I've just been doing it in Twitter. Once I macro sell everything, then I'll do like one mass update here. But for now, you're just trimming here and there, just putting it on Twitter. But yeah, guys, so that was today's stream. Bit educative. Hopefully you guys enjoyed the different format. I know it wasn't like usual where we just, you know, go over different coins, but wanted to give you guys like a different view, right? Something you could actually use instead of just giving you chart levels and stuff. SMC, I don't really do SMC, bro. That's smart money concepts, right? I don't really do that. The traditional technical analysis for me is good enough. So yeah, that's that. I don't really know what constitutes SMC. What's the difference between SMC and ICT? Is it just like a different person, same concepts? What, are we getting 108? Oh, we're getting a pump, that's for sure. There we go. We're close. We're very, very close to that. This ain't the one sec. There we go. Damn it. See what we get. Don't short blindly here. Someone said they're going to short. Don't short blindly, right? Look, if you slice through this level, there's no reason to take a short. You only take a short here if sellers confirm this level, right? For now, all I've done is put a potential level down. Okay, when I say AB equals CD 2.618, I'm not putting it here and showing you guys this level to tell you guys to limit short this or anything like this. Okay, once we get there, see what kind of price action we get. Do sellers / buyers validate this level? We could go close above. Sellers could try to take control, but buyers could literally just hold it. If that happens, your short's going to be fucked because you're going to keep going up, right? If we go here, we could be completely high. Your limits could get wrecked, right? Only if we go down and then you see local resistance coming in, and then you confirm. Sellers are confirming this level to be resistance over time, right? Once you get clean confirmation that sellers are showing you an edge, then you take a short. Don't blindly short here, please. That's not the purpose of me putting these levels down. When I put these down, I'm simply giving you targets, right? That's all it is, it's targets. When I say targets, I'm not giving you prediction of where is it going to top or is it going to bottom. I'm just giving you, in terms of different confluences, where is an area where buyers or sellers might be interested in trying to exert control, right? Until that comes to pass, this is nothing but a line on a screen, okay? Wait for price action to confirm this area before you decide to take any sort of trade around this level. You shorted 107.200. Well, that's what it is, right? There was nothing bearish going on. There's no key levels. There's nothing here. Even in terms of the weekly, nothing. You literally above your last weekly seller zone. There wasn't any reason to short here is what I'm trying to say. Not trying to sound harsh, but you know, unless you see a clean reason. Don't just be in a trade to be in a trade, right? There were no signals here to tell you guys be in a short. Nothing. Look at the daily. Look at the 4 hours. High volume buy candle, right? Taking us out of our last peak. There's nothing here saying short already on a significant enough time scale. Trend is very much to the upside. BTC dominance is 108. There we go, guys. Fucking hell. Come on. Absolutely crazy. That's ridiculous, man. Look at that. From the lows, you're up 600% on a fucking high cap like Bitcoin. Are you crazy, bro? Something for you guys next cycle as well. For like many people, right? Especially if you're beginners, you don't have like a full grasp of your own system, your own thesis yet. Many of you would do well literally just trading Bitcoin, right? I'm not trying to sound harsh when I say this, nor am I asking for a hands up, right? But if I say this and it affects you, then you're one of the people. Did you really outperform Bitcoin or not with your portfolio this cycle so far? That's the question. If you haven't outperformed Bitcoin, what the hell are you doing, right? If you're going to take risks, doing this, doing that with a load of different coins, right? At least make sure you outperform the king. Because otherwise, you'd be better off just parking your money in Bitcoin and just letting it run. So look, if you haven't got your own system, or rather, never your own system, but if you're not well versed with trading yet, right? Then honestly, just prioritize Bitcoin. Like when I'm scalping, 99% of the time, I'm literally scalping Bitcoin. I'm not scalping anything else. If I'm doing lower time frame trading, it doesn't make sense for me to go and like scalp SWI or something like this, right? I look with some entries, sure, but not regular scalping. It's all Bitcoin. $108K, and then let's see. The question is, do they give us 110? Do they front run 110, in which case this 2.618 would be very valid, or do they just completely blast through? Because 110 is going to be psychological, so I can't imagine them giving us 110 perfectly. Do you know what I mean? It's like when everyone expected 100. What did you do? You ended up going past to 104, 105 before you had the pullback, right? So basically 109, or you get 114, 115 probably. Let's see what happens. No reason. It's like trying to short every pump. There's no reason. Absolutely none. If it scalps, sure, it's a different thing, right? If it scalps, but then if you're doing 3-minute entry models or something like this, right? For example, how could you have taken a short on this on let's say 100 you said 107,000, right? So we had a 4-hour seller zone right over here. So when you see price go up towards, let's say, the mid, right, of this area, you can take any time you get confirmations, clean entry confirmations above or below. You can take, so for example, boom, 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 inverted smiley around a 4-hour level. You can take a short over here, right? But now look at the time frame I'm in. If I'm scalping, I'm not scalping on the daily, on the 4 hours, because the trend on all of those is telling me we're gonna go higher. So why would you hold on the lower time frame, right? As soon as you get confirmation, you're below. There's your entry. Your stop loss is here, right? So this is what I'm looking for when I'm scalping. And I'm looking at footprint charts above this, right? You close above this line, you cut. Right, so when I scalp with size, which is why, when I post on Twitter, this was a good day scalping. I'm posting like 4K profits, 15K. It's because when I'm scalping, I'm looking for key levels, right? High time frame levels, low time frame entries. And when I get a clean setup like this, where I know if I'm wrong, I'm hardly losing anything. I'm losing pennies. I can size up, right? 2-3 BTC short. From an initial, and if you get a reason to size up, you can size it up to 5-6 BTC, 10 BTC even, right? Highest of shorts is about 20-25, but there's a very, very clean short you can take based off just 2 levels, buy seller zones, right? Once you get here and you see aggressive selling going on, aggressive sellers not being rewarded, you close your shorts, you get the hell out, because you realize, look, the overall trend is still bullish. You don't hold this, right? So the only valid short I can see here that you could have taken is this 3-minute scalp. Looking at this, there is literally no other short that was valid. That's around key levels, right? None. From my perspective anyway, of course. I'm not trying to say anyone's wrong or anyone's right. From my perspective, this is the only valid shorts that I can see around that sort of level. Because then what did you do? Look, you came up and you flipped this. So if anything, you had a long here, right? You broke out, came back to test the support, right? So here's your entry again. As soon as you confirm something to be resistance, your confirmation opens above. You just take it to the next TP point. Right, all about confirmations. One side shows you an edge. Who showed you an edge here? The sellers did. Who showed you an edge here? The buyers did, not the sellers. You just take it based off that. Right, so again, there is nothing here telling you sellers are showing you an edge, right? So that's what it is. So if you are, taking a scalp, treat it as such, right? If you're a 3-minute entry model, TP on that 3-minute entry model, especially when you're in a trending market. Because now this is a magnet, 2.618. That is a magnet. Goat. Okay, I'll do goat last one, and then I'll dip goat USDT. Have I even got goat master list? Nope. Which has the? I'm just gonna go with anyone. I don't. Goat USDT. Mexi always has the most. Let's be honest. Mexi or CoinX. So Mexi low was 0.056, CoinX low was 0.09. Okay, Mexi it is. So goat. Let's take a look. Okay, weekly. That's way too big of a seller zone, but it's a level nonetheless. Then on the daily, you have a liquidity pocket right over here that's been filled. You have an order block then right over here. What else do you have? Right, you've topped out at the front run of the range extreme, which is here. You're below your log 618. So as long as you're below this 618, I would not recommend being in any positions. But if you were dying for a position, like you've got to hang on, let me go back onto linear once. Yeah, so you've got that there. Let me hide this. In terms of log, right, a very easy way you can look at this right now. As long as you're below this 618, don't worry about being in any positions, right? If you start seeing 1 hour closes above the 618, right? So for example, if this closes above, then yes, you can be in a position. This is log, right? Log, very, very pivotal in terms of higher time frame levels. You have got distributive structure locally on a macro level, right? Here, here, and here, right? So you can see that very, very well. If I do this, right? Initial resistance, radon liquidity, reconfirmation of resistance, right? SFP close below. So that could give you a move down towards 52 cents again, right? Who knows? On the macro, that could give you a move down towards 52 cents. The only way you can outdo that is by holding this, right? As long as you can hold this and put a smiley in, you can have a chance at outdoing what this macro structure could potentially do. But if you close below this white line, right, what do you have here? You have a daily fair value gap right over there. So one way to look at it is if you get a successful raid of this daily fair value gap and you end up closing above the white line, you can start laddering in, size up if the 618 gets flipped to support, and you're trying to run this back towards at least 90 cents, right? If you close below the daily fair value gap, there's no point entering a position, right? So you're basically either waiting now for a reclaim of this 618 on log, right? Or you're waiting for a successful raid to this daily fair value gap. If that daily fair value gap is lost, that is when you have this entire range, i.e. the daily order block to worry with, and you're looking for the entries at the mid around 57 cents or whatever that's going to be, right? So this is an interplay between log and linear. Log's going to give you levels, linear doesn't. Linear is going to give you levels, log doesn't, right? But very, very simple. Either way, you don't enter right now. Wait at least for that 618 to be flipped to support before you start laddering in. Otherwise, you might get one more rate, something like this perhaps. Confirm a smiley face here. If the smiley face isn't confirmed, then you've got the order block. You're just gonna have to wait for those lower levels to get hit, set some alerts, and then if buy step in and reclaim some of these areas in the future, you add then. Okay, right now no. Just because you're below the 618, you're above this, it's a coin flip, right? It's a coin flip. Do you reject and go lower? Do you reclaim? We don't know, right? Neither of the scenarios have happened yet. You are at crossroads. Wait until one crossroad is validated. On code, very very simple actually. If you look at this on log, there's no point entering right now. No problem. No problem at all. Okay, guys, I'm gonna call this here. Thank you. Very very. What's your entry on Go 6919? I mean, it's not a bad entry, but just be mindful, especially if you actually lose this box. Okay, you could slip down really really fast. Just be mindful of that. Yeah. Thanks, bro. Caleb, thanks for being here, bro. Yeah, thanks guys for being here like usual. I will upload this to YouTube. Let me just stop the recording here. 1 second. Stop the recording.